Hi, I'm Paul Jackson, President of Centurion Advisors Corp. Located in Sugar Land, Texas. This is a short introduction video which explains how our total return portfolios are constructed. Our total return portfolios are the highest level of customization we offer for the asset allocation needs of high net worth and institutional type investors. Since we are using more individual stocks and individual bonds in the overall allocation rather than funds and ETFs, the initial account minimum is $500,000. Each client has a different risk profile, and therefore each client's portfolio looks a little different, but we have sectioned off 3 levels of risk that the portfolios will fall into. The first is total return growth, which has a time horizon of 7 or more years. The second is total return balanced growth, which has a time horizon of 5 to 7 years. And the last is total return balanced income, which has a time horizon of 3 to 5 years. All investment strategies have the potential for profit or loss. Now, taking a look at how these portfolios are constructed and what they invest in, we'll look first at the total return growth portfolio. This portfolio contains between 70 to 90% equities and alternative investments. Within this super asset class are the individual stocks we manage in our individual equity portfolios, the legacy large cap and small cap GARP portfolios, and the dividend-based equity income portfolio. The remainder of this asset class is filled with other diversified equity mutual funds and ETFs to ensure asset class coverage, and alternative investments such as managed futures and real estate. Then, 10 to 30% of the portfolio contains fixed income investments, such as corporate, government, and foreign individual bonds, and then other diversified fixed income-based mutual funds and ETFs, again to ensure proper asset class coverage on the fixed income side. Moving to our total return balanced growth portfolio shows that the equity and alternative class moves to 50 to 70% of the portfolio, and the fixed income portion moves to 30 to 50%. Lastly, the total return balanced income portfolio will hold equities and alternatives of 30 to 50% of the portfolio, and the fixed income portion increases to 50 to 70%. So each portfolio delivers a different risk profile for specific clients. With a $500,000 portfolio, we can integrate these strategies but typically only use the legacy GARP portfolio stocks due to the amount we'd like to hold in each stock. However, once account levels increase, say to over $1 million or more, we then can start integrating some of the other individual stock portfolio selections into the portfolio, like our small cap GARPs. Now, there will be the same asset class coverage in smaller and larger total return portfolios, but how we invest in each of these asset classes will differ based on the total account value. Lastly, larger portfolios allow us access to wider platforms of institutional class and alternative investments, in addition to the potential for private offerings. In summary, our total return portfolios offer the highest level of customization we provide. They are a total asset allocation solution for high net worth and institutional investors. Changing investor risk tolerances work well within these portfolios since we can move from a riskier strategy to a lower risk strategy and vice versa very easily. The portfolios have transparent pricing and fees and allow us to put all of our best ideas into one portfolio. If you would like to learn more about our total return portfolios, please contact me, Paul Jackson, for more information at either 281-207-5485 or at paul@centurionadvisors.net. Thank you for your time, and I look forward to meeting with you in the future.